over the last few years, and actually probably more recently, we've come to the realization, which I think some physicians are starting to realize, that, hey, listen, we are high earning but low net worth individuals, and we're going to be grinding. I say grinding, but we're going to be working the same way that we're working right now, dependent on our paychecks and our production for the next 25 to 30 years, or however long it's going to be until we get to retirement. And, in order to break that wheel, we wanted to pursue, well, passive income. And like you said, passive income is not an easy select button, right there. And, with our first property, I mean, we've had that property for well over 10 years. She's 20 some, no, not 20 years, but about 15 years. And it's been phenomenal.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. Not all investors start with experience. Some start with intention. Dr. Vishal Desai, a full-time gastroenterologist and MBA grad from Northwestern, is building a real estate business alongside his father and brother. From owning a medical property in Michigan to eyeing multifamily deals and syndications, he's on a mission to turn high income into high net worth and long-term freedom. Here we go. Vishal, welcome to the show. And you are, for the listeners that can't see, you are in your mobile office while we're shooting this show. So welcome to the show, man.
Hey, thanks a lot. Thanks for having me.
And you are in the greater Chicago area. Is that correct?
That's correct. Yeah. Western suburbs, Western Chicago. That's
so when you look out that window there, we're in the, almost the end of March already. Holy cow. End of March. Do you see snow outside those windows?
Yeah, I woke up this morning to a surprise of snow on the ground. It was wow. It was not great. The last few days have been great. It's been 65. We hit 70 here on Tuesday.
Oh, wow. And now there's snow on the ground.
Family and I were it was amazing. And the family and I were in Cancun the week before. So it was not great waking up to that, but hey, it is what it is.
So I have transplanted to the South, in South Carolina currently, and I remember one time in Michigan, so we lived in Southwest Michigan, that's where I lived my whole life. We literally mowed the lawn one day and then had to shovel snow the next day. Like, that's how crazy things get.
Yeah. I can see why people move out of the Midwest. I grew up in Michigan as well. It's just not even surprised anymore,
Yeah, absolutely. So I always like starting off with talking just a little bit about your medical career, because you are a physician and you're also a real estate investor. So I want to talk a little bit about the medical career, but I want to quickly jump into real estate here today. So why don't you tell us a little bit about your medical career so far?
Sure. So I am a gastroenterologist, a liver specialist, finished training about 6 years ago, been working out in the Western Chicago area at a group called Dooley Health and Care. It's the largest, actually, physician-owned company in the entire country. We have about 1,000 physicians and about a couple hundred partners, including myself, that own the business and helping it grow. I do have a pretty significant interest in weight loss. So instead of doing my typical, general GI, I want to focus on weight loss management, including it's a minimally invasive procedure that us gastroenterologists, a handful of us, can do, called endoscopic sleeve. That's my focus. It shifted over to that weight loss focus a couple of years ago, and I'm super excited about it. I think there's a huge market and need, obviously, in America, let alone in the Midwest, to help our patients out here. Yeah.
Tell me a little bit about what sparked your interest to focus on weight loss specifically.
I've always had an interest in it. I think I like the satisfaction of getting a patient to lose weight, improve their cardiovascular risk factors, improve any evidence or any history of fatty liver disease and risk of cirrhosis, improve complications from obesity, which include multiple different malignancies around the body, risk of stroke, etc. With weight loss, you're able to, well, not only visualize the patient doing better, but also help prevent these things. And also from a mental standpoint, I mean, with weight loss, people do so much better from multiple facets of their lives. So I think it's able to touch on multiple different parts of their lives with weight loss. And I just think there's such a grand need here in America. And I think with the whole like GLP-1 Ozempic craze over the last few years, people are more cognizant over it. And even though I think those medications are great, they've opened the door for a lot of people to lose weight. I don't think they're the miracle drugs or, you know, the groundbreaking things that I think people think they are for long-term use. But now we know that weight loss or obesity in America is prevalent. You know, I remember growing up, I'm 40 years old as of a month ago. I remember growing up and we talked about the obesity epidemic in America, and we're worse now than we were 25 years ago, which is kind of scary to think. So I think there's definitely a need, and that's what I want to focus my career going forward on.
Yeah. Well, happy birthday on 40. You look absolutely amazing for 40. You probably get that a lot where you don't look
I
your
do.
age.
Thank you.
And people don't take you serious, and probably you don't have that instant authority, you know, because you still look young, right? But happy birthday on that.
Thanks. Thanks a lot. Yeah.
I did notice that your bad joke on LinkedIn about Ozempic that you get to give it away now, but it was like, and you can't hear you can't see the sarcasm when you're. So I was reading that, I'm like, what is he talking? Is this good? Is this bad? And when you think about it, man, however that drug tends to work, I've heard lots of things about it. If we look at it in a holistic approach, as opposed to something like that, everybody wants the easy button, right? And I'm sure it'll help some people who can't make certain decisions. But there's proactive and reactive things that we can do here. And it's just like real estate. Everybody's looking for that easy button and want this get rich quick or easy stuff where you completely passive. And it's like, it doesn't exist. There are the unicorns out there. But it doesn't really exist the otherwise, where you've got to put the time in, and it's going to take time to find these right things. And you've got to be consistent, persistent. You've got to have self-control. I mean, there's so much of our health is how it mirrors real estate. So what a beautiful jump into real estate on this one. You're an investor too. So not only are you part owner in the physicians group here, but you are also an investor. Tell us about your real estate career so far.
You know, it's just budding, Brett, to be completely honest. You know, my brother and I have owned one property in Flint, Michigan. It's actually a facility that has a medical practice and a surgical center on it. So we collect rent from the providers there. And over the last few years, and actually probably more recently, we've come to the realization, which I think some physicians are starting to realize, that, hey, listen, we are high earning but low net worth individuals, and we're going to be grinding. I say grinding, but we're going to be working the same way that we're working right now, dependent on our paychecks and our production for the next 25 to 30 years, or however long it's going to be until we get to retirement. And you know, in order to break that wheel, we wanted to pursue, well, passive income. And like you said, passive income is not an easy select button, right there. And, you know, with our first property, I mean, we've had that property for well over 10 years, 20 some, no, not 20 years, but about 15 years. And it's been phenomenal. And, you know, my dad's a physician as well. He's, you know, tending toward retirement right now, but we just started discussing about, well, getting involved into real estate. And the initial conversations were about, okay, apartment here or condo here, condo there, single family here, single family there. But we've really gained, a significant interest and traction into commercial real estate and specifically multifamily, properties. To be completely frank, Brett, we have not purchased a single one, but we are in the process of vetting them. And we know we're doing our research. And I can't tell you. I've read 2 books in the last couple of weeks. The ABCs of real estate investing and real estate millionaires. And then a book I've read a couple times before in the past is Rich Dad Poor Dad, just
Yeah.
as a reminder for a lot of these things. But yeah, we're working towards starting that process. And very excited about it, not just from a personal standpoint to developing that passive income. I think it'd be incredibly fun, fulfilling. I think we could really be great, be really great lessers and really grow our company and business and, have other satisfaction besides, what we do as physicians.
Yeah. And that's another funny word there. You said lesser, and it's like, well, it's the English language. Are you greater? No, I'm lesser. No, it's not. It has nothing to
Yeah.
do with greater or lesser. It's the you're renting stuff to people, right?
Right.
Hey, while
Right.
you were mentioning that, it made me. There's this book. I like this book. I actually had Dr. Corey Fawcett on the show. We have him back too, but I really like what he put together in his book. It's called The Doctor's Guide to. He's got a whole series here, but The Doctor's Guide to Real Estate Investing for Busy Professionals. And the reason why I thought about this book when you were talking, Vishal, is that his focus is like 8 to 20 unit
Mm-hmm.
pieces, and it's direct to seller. So it's more of the active piece. How he's getting them, how he's making the offer, how he's managing them. So it's an interesting piece. So it's getting into that multi a little bit, but it's not I always also hear this, there's a line where you can get, don't do anything less than 60 or 70, then you can have on-site, so depending on which direction you want to go with scale, that's a great book. It's just
I
great.
appreciate it. I'm going to pick
Yeah.
that up.
It's a great piece, and his experience. I mean, he's a great guy to reach out to and listen to as well too, because his experience is remarkable through the years and what he's done building his portfolio, owning them now, free and clear. So it's just a remarkable story. How did you find that first deal that you talked about in Flint? How did that deal come up?
Well, we had the privilege of being born under our dad. He set that up. He pays us rent, and the providers at that group also pay us rent. So he set that all up actually years ago, and that really got things started. And we have about 5 acres in that area, including the practice that I think we're looking to transition over to someone else in the near future. But that's how things got started. I mean, we were young. We were in our early 20s when we got that property. And we've been investing just through the market since I think we're 18 years old. Set up a Roth at that time. Been in index funds and mutual funds since then. So I guess it started pretty early in our lives, but more recently, yeah, we want to delve more into actual real estate, just given how, well, I'm not going to even, to lecture you. I mean, very well, right? I mean, we're including increasing net worth, but also from a tax deferral standpoint, and a deduction standpoint, I think it's going to be very, very beneficial.
Yeah. In that first deal, it sounds like maybe your father was the original owner. Did he sell it to you kind of like on seller finance?
So yes and no. I think so he ended up buying that property, building that property in 2000. Actually started building it late 1999, 2000, and then we transitioned the entire thing over to us. So yeah, technically, like the rent that he was paying us, we just put toward the mortgage. And just kind of went from there. So no, I guess technically not really. I think it was just through the bank.
Yeah. Well, it makes sense. What have you taken away from that deal specifically as far as lessons learned? It's kind of like that one to me, I'm hearing it is a unicorn deal because, being born into that situation is definitely helpful. Yeah. Not everybody has that, but there are opportunities out there. And believe me, if you weren't born into that situation, all you have to do is go find it because they're out there. The unicorns are out there. You just have to know that you're looking for a unicorn and you have to trust that you can find one. But what are some takeaways from that deal specifically that you've put in your knowledge bucket?
So I think as my dad heads toward retirement, we're looking for, tenants who are going to lock in long-term deals, right? We don't want someone who's going to take the clinic space for a year or two and, hope for the best after that. Looking for 5-10 year, leases. We're looking for, practices that can come in and actually bolster up the production value of the surgical center there, whether or not it's going to be through GI or pain anesthesia or ophthalmology, and you name it. We're looking for people who can bolster that property because that's going to increase revenue. That's going to increase, the valuation, down the line, right? So that's what we're looking for. So take that aside from the medical space and put that into anything else, any other commercial property. Like, we're looking for a property that we see potential to increase, its value, right? So if, fixing XYZ in a property is going to increase value because it's going to allow for increased rent, great. If, if we can lock in deals for, if it's an office space for 10 years depending on the location and what we can provide, great. I think that's what we're looking for. And I think that's what we've learned in the process of, renting, I guess, my dad renting from us and now transitioning out of the practice. We want a long-term solution that's going to be, it's going to be stressless.
Yeah. 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 You preload the stress when I say preload the stress, you do that in vetting the tenant. Vetting them, vetting their business, looking at financials, all of that stuff, and then structuring a deal that works for them and not trying to squeeze every penny out of them, but giving them a platform for them to elevate. Now, this is the commercial space. There's definitely some attraction to the medical retail in the medical space, in the commercial space. And I hear a lot of physicians that do that. But you're talked about transitioning into multifamily. What is it about multifamily that catches your eye?
I think it's the potential. So I feel like if you take a multifamily property and you're looking at their occupancy rate, you're looking at their rent compared to the market around the area, and if you can find that small to moderate size potential to improve upon that, that is, I think, going to be satisfying both from a personal standpoint that we're able to improve the actual facility and its valuation. But I think the return on that and the length of time to see that actual transition from where they are right now to where you can get them is going to be quicker. That's just my opinion. Again, that's based off of zero experience thus far, because we don't own a single one of those properties besides our own homes. It's hard to say that definitively, but that's what I think that we have the potential to do. I hope that answers the question. I think
absolutely.
And we've had quite a few of other industrial properties that have been brought to our attention, retail properties that have been brought to our attention. And honestly, we're not familiar with that. With real estate, with multifamily, we know. I've lived in multiple apartments living in Chicago for the last 13 years. My brother's been the same way back in Michigan. We know what we're looking at for the most part. We know what has gone wrong on our own properties for the most part. So I think we have a little bit more familiarity with multifamily places. Yeah.
Yeah, working with things that you know, and if there's that passion in you to make them better, being a good operator, not only increasing the livability for the tenants, but also increasing the value as an investor as well too. So super important stuff. Now, when you're talking about this idea of investing with your brother and your father, have you had any thoughts on how that company would be structured? And again, this is not legal advice for anyone. We're just sharing experience. Sure. So how have you thought about that LLC or how you invest? How would you combine capital?
Yeah, off of more than several conversations now. We already have an LLC set up from the original property that we own. The idea behind any investment going forward would be 33.3% in investing currently. We do have a decent amount sitting from the current LLC that we want to start our investments in. Any, honestly, any margin that we're getting with any property, we want to save it. We're not going to be distributing dividends to ourselves. We want to save that and put that toward another investment. That's how we want to. Yeah, that's how we want to do it.
Yeah.
Right now we're all working. We're all, knock on wood, we're all doing well. And we don't need the capital right now.
Mm-hmm.
We want to keep growing. So like, if a property is returning a decent amount every year, like, it's great. Let's put that toward another property.
Yep.
And that's how it's going to be. And my dad's done very well for himself. My parents have done very well for themselves. So right now, I think he's focusing more on us. He wants something to do in his spare time after retiring. So yeah, I think going forward, we just want to grow the company and see what happens. And if we get to a point that, we don't want to keep working, then yeah, we can distribute some of the dividends and go from there and have some actual passive income that we can live off of.
Mm-hmm.
But and I think that's going to take about 20 years to get to.
Mm-hmm.
So I have no intention of taking anything out. I want to keep growing.
Yeah. By that time, you have to buy Pops out so he can take his money out sooner rather than later.
Yeah.
Hey, when you're looking at multifamilies, and we talked about what is attracting you to that asset class, but do you have a buy window picked out? Like what type of property, how many units, where at, what kind of return?
You know what, Brett? I don't. Again, we've had a couple that have been brought to our attention, but we really don't know. And I think that's the reservation myself, my brother, and my dad have. We're like, we need to jump in, but we also don't want to be impatient in the process, right? We have to do our due diligence. We have to feel comfortable with whatever property that we're looking into. I mean, it could be, 10 units. It could be 40 units. It could be more. It just really depends on what's brought to us and what we can, in our due diligence process. And obviously, yeah, we're going to need to hire someone to help with that process, and go through the vetting process again, for that. Yeah. And again, I'd love to pick your brain to see, but it's just, we don't know. We don't know.
So right now, and again, everybody's going to have their own set of stuff. I can tell you right now, with the hopes that, hey, if anybody out there listening has this building that they want to sell to me when I explain this, my email address is brett@physicianwellsystems.com. You hit me up and we'll take a look at it. Anyway, that is 100% shameless plug right there. But
I love it. No, that's what you got to do.
Talk it into fruition, man. Abracadabra, make it real, right? So what we're looking at currently is in South Carolina specifically, and we're looking in the 8 to 20 unit range. I'm also looking at larger deals, but it's just not something. If I get a larger deal come into me, I'm still going to underwrite it initially to get the knowledge, to get the experience. But that's something I'll have to pass on to my colleagues who have been doing this. And there's lots of reasons behind that. One of the main reasons is you have to have the experience in order to sponsor. To get the loan, you have to have the experience already. So in these 8 to 20s, in my current portfolio, I know that I could reason my way into another loan. But in that regard too, just basically off of that book again, in Dr. Fawcett's experience, going above 20, how that affects the operating costs versus the net operating income. And it just maybe a little easier to grab a hold of a deal like that too, because then there's not as many people. There's plenty of people looking for those kind of deals, but not as many in the larger units. But when it comes to returns, we're looking for just roughly the 5% cash on cash return, 15% IRR, and a 2x equity multiple. So those three things really drive our analysis when we're looking at stuff. Sure. South Carolina puts us in a pocket, 8 to 20 units puts us in a pocket. And I'd really love to see deals that have the ability to do seller financing with the cost of money where it's at right now. We need a deal that's going to cash flow right out of the gate, and with the room to value add, because I don't want to go in paying a mortgage that's not, that's not making it. So, given that, you can look at then you could get in even further. If that passes the napkin test, then you can get even further. The age of the property is really going to drive on
Yeah.
what type of repairs are needed, what kind of plumbing, what kind of electrical, windows,
Right.
HVAC, all of that stuff. And, on top of that, the area window, you look at, basic stuff like unemployment, employment,
Hmm.
wages, income, crime, all of that stuff to really get you
Right.
focused in. So that was just a whole bunch in a hurry. I'm sure you've heard a lot of that stuff already, right?
No, that makes sense. And I like that. Like, I appreciate your, yeah, the comments, especially between 8 and 20. That makes sense. And your goal, your, IRR goals and return goals, etc. That makes a lot of sense. Yeah.
Yeah, and really in that range too, depending on the market, you may have the capital to even acquire it in cash, stabilize it
Hmm.
even more, and then get all your money back out too. So, and what I would suggest is kind of like picking a couple of spots as you're starting to underwrite and, make these relationships with brokers who can bring you the deals. Get a buy window written out,
Yep.
just hashing one out at first. And then people are going to start tearing it apart. It's like, okay, then I can change it here and then I can change it here.
Yeah. I love that. Okay.
So
Yeah.
if you know you're looking for, it's a lot easier to find. If you know you're looking for a unicorn, then just write that unicorn out and make sure everybody knows that you're, come on a podcast and say, hey, I'm looking for this property. If
I'm
you've
looking
got
for
it,
the scene.
you let me
Yeah.
know. Yeah. Yeah.
That's amazing.
So what's next, man?
No.
What's next for Vishal? What's like next 5 years? What's top of the chart
Yeah.
for you?
Top of the chart. Well, listen. First and foremost, I mean, family.
Mhm.
I got two kids. We're expecting a third in a few months.
Congrats.
Thanks. We currently live in the city of Chicago, downtown. We have a nice house there. Goal is to move out to the western suburbs. I do want to keep that house and rent it out. So I'll refinance it, pull some cash out, bring it out here. And then, yeah, listen, I love practicing. It's not that. That's why I went into medicine, to take care of patients. I love doing that. But yeah, I want to add other facets to my life. I want to become an entrepreneur, and I think
Mhm.
real estate's the way. And like I said, it's just a matter of my brother, my father, and I just jumping in, getting our feet wet, and going and learning from the process. 5 years, I'm hoping that we have a couple of properties, if not more.
Mhm.
Really, I think that's a realistic expectation that we're having right now, and I think it'd be fun.
Yeah.
Really, you
I
know.
think even in that path too, even reaching out to other people who are already doing it.
Yeah,
And I could even link you with a couple of people to where that way,
that'd be
even as
great.
an LP, what's called a limited partner in a syndication,
Right,
or
right,
even
right,
these
right.
smaller partnerships on the smaller buildings, if you're in that group as a general partner, you're getting that experience needed. So that will expedite your learning process and your process
Yep,
to pulling out what's called agency loans as well too. So
yep.
yeah, thinking outside of the box, expanding
Yeah,
association, and believe it, man. Just believe it. These thoughts that you have, you're right on it. So believe it, stick with it, trust the process, reach out, underwrite, and just keep rocking and rolling, man. You got it.
appreciate it. Actually, it's so funny. I completely forgot to mention. We invested. And the reason I forgot it's been 15 months. We invested as an LP into a car wash in Tampa Bay.
Hmm.
But the hurricane last year like really delayed things.
Oh
We were
wow.
supposed to be up and running in November of last year, and it's going to be delayed another 6 months. But we were super excited, my wife and I, about the car wash business. Just given
Hmm.
that what we read and everything. So that's still we don't have a car wash, but
Right.
that's on the docket right now too.
Oh yeah.
Um,
LPs.
but yeah,
Yeah, it's a great, and then car wash is a whole nother world on the depreciation side on how the tax advantages of that, how that breaks down, expedites that process as well too. So
hmm
another little thing there. But if we could do anything to help you out on the multifamily journey, whether it's connecting you with other syndicators, looking at numbers, connecting you with our resources, and that last little nugget here would be, depending on what area you're looking in. making sure, one, that that's a good area, knowing how do I know that's a good area, but then two, building a relationship with a lender right out of the gate, because that lender is he's not going to underwrite all your deals, or they're not going to underwrite all your deals, but they're going to help you find that deal that works. So if you can lean on them for their experience and their underwriting processes, that's going to mitigate risk for you as well too. And again, expedite that learning along the way.
And learning along the way. Yeah.
Yep. All right.
I really appreciate it, man. Really, I am gonna I am gonna reach back out and pick your brain a little bit. But this was great. Thank you for reaching out to me. This was really nice.
Yeah, I love these conversations, man, and it's from the full gamut of seasoned, scaled investors, new investors, entrepreneurs, and it comes down to just really we started too. It's that reactive versus responsive piece. And if we can do proactive versus reactive, if we can do things that help set us up for 2, 3, 5, 6, 10 years down the road, it just takes these little things that you have to do consistently to get there. And we can expedite that process by sharing our stories and sharing our resources together. So thanks again for coming on today, Vishal. It's been a wonderful conversation.
Brett, it's been a pleasure. Thanks a lot for having me.
Whether you're just getting started or you already have your first deal, Vishal's story is a reminder that you don't need to have it all figured out. Just start where you are. Partnerships, especially family ones, can be powerful wealth building vehicles. Doing the research and building relationships matters more than rushing into a deal. To follow his journey or connect, check him out on LinkedIn. And as always, thank you for your time, and most importantly, thank you for your attention. This is the Real Estate Mogul MD.